Hey, greetings, Dr. Jeffrey Scott. This is my weekend market update for the week ending 5/18/2025. I titled this one, Will the Credit Downgrade of the U.S. Derail the Recent Run of the Bulls? This came in after the market closed on Friday, and we saw pretty much an immediate drop in the futures. My email address is marketmripro@gmail.com or hgsidoc@gmail.com, my old one. And my Google group is called Top Down Trader. All those can be used to get a hold of me. Um, I use a software tool that was developed for me called Market MRI Pro. For those of you that'll be coming to the June meeting, you'll be getting an email from me probably 10 days before the meeting. So that's going to be soon, giving you an opportunity to have a no cost trial for 3 weeks, the week before and the 2 weeks after the meeting. For those that already have the tool, I'm going to put a second video up sometime over the weekend on the Top Down Trader site to show you some of the really cool new features that we've put into the program and also introduce our first add-on with a name that you will recognize. So glad you're here. If the audio isn't great, I apologize. I'm doing this. Had a work meeting down in Miami Beach and I'm still here, so don't have my usual setup. As always, this is for educational purposes only. Anything I should mention should be taken in the spirit of education and not be considered investment advice. The intent of the video is just to demonstrate how I use various tools to look at the market from a top-down fashion. Trading involves risk, and you alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock I mention. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. And I have tools for multiple platforms, but I consider myself an independent trader. Boy, we had another great week in the market, didn't we? Question is, for how long? If you're looking for my wealth charts review, I do those Monday morning. And then if I have time, I'll do another one during the week. And I'll continue to do those. I know a lot of people follow me for wealth charts and bought my tools on wealth charts, so I'm not leaving you behind. Orange County meeting, it's coming up June 6th through 8th. Oh, I thought I updated that slide. There it is. At the Resident Inn and Suites in Tustin, Orange County, $400, 5 speakers, 3 full days of trading education, a free trial of my tools. And for more information, contact Greg Mills at GAM72054 at AOL.com. We're probably, if not there, close to internet only options, although as we get closer to the meeting, we'll see if more spots will open up in the room. Confirmed speakers on the left via the internet: John Person, Dan Fitzpatrick, Matt Caruso, and Chris White. And I'll be live in the room doing a bunch of the presentations. Anybody that attends live or online or who ends up paying and is unable to attend will receive videos of all the presentations, as well as at least my PowerPoint, in addition to the free trial of the Market MRI Pro toolset. And then if you want more information, if you want to interact with myself or other traders who trade like me, join the Top Down Trader group. You sign into Google Groups, you have to input your Google account, and then find my group, which is called Top Down Trader. There's no cost, it's not about solicitation. Very simple. I had a small mailing list, and even my family members would come back labeled as spam. So if that's how the internet email world's going to treat legitimate emails, let's go through something that's easier, and it comes from Google and it works just fine. And it's no cost at any place. I always ask the question, is there a recession in our future? Upper left is a 10-2 curve. We all know, because you heard about it for months, how the yield curve inverted is now back above. If you look to the left, going back to the 80s, after every time it's inverted, you get a gray bar. That gray bar is a recession. Recessions occur after normalization of the yield curve. If you look at the 10-2 years, you see the same thing. But the thing to note is it doesn't occur immediately. So the fact that we have not yet had the recession doesn't mean we're going to get one. Now, another question might be, do we have any signs of it? Well, the Philadelphia Fed Diffusion Index came out this week and it moved from minus 24, 26 to minus 4. Why is that important? Because when you look at the recession bars, typically it's at minus 20 or below when a recession starts. And on the right, you have a measurement of credit tightness, and that measure does not show any increase. And you can see around the recession times, it will spike. And in fact, it's actually come down some. I always like to leave you with know your news and earnings. On the left, you can see major um, news events or speakers, and you see a lot of arrows on the left-hand side. That even includes Fed President Powell on our federal chair Powell at a commencement address on Sunday, but that'll move next week's market. But lots of Fed heads speaking this week, and there's some news, but it's more about Fed heads. And oh, by the way, still have a ton of earnings. The funny thing is, it used to be that Home Depot was really important. It's still an important stock, but I don't think it is up there with the mag from earnings. But we got Home Depot, we got Target, BJ's, Deckers, and a number of other popular companies there. And as I say in the lower right-hand corner, it is a judgment call to hold stocks over earnings dates. Just bad judgment to not know when your stock's earnings date is scheduled. And now, as I like to say, on to the charts. Talked about that already, and let's turn this off. Perfect. So, Market MRI Pro is a freestanding tool. It includes data. The data is close to real time. We don't push it in streaming fashion. We allow you to get up to the moment quotes, and as you want to, refresh it here, it takes 1 or 2 seconds. We'll refresh it, so it's essentially real time, but again, not streaming. If you see up here under daily performance, you could see Bitcoin was the leader on Friday. The Russell was the leader of the equity ETFs, diamonds and spiders, all of them in about the same place. The Q's a little bit lower. So a modestly positive session led by small caps. The dollar was up 0.29 and volatility was down 0.45. Over here, you could see that the major stock equities all traded and closed at the upper part of the range. Of course, that may mean nothing with the fact that we had the credit downgrade, and that could lead to perhaps some weakness in the market on Monday. We're overdue for some weakness, so it certainly would not be a surprise. It would give the market any excuse it was looking for. If we look at 5-day performance, the Qs led up 6.87, Spiders 5.3, Russell 4.5, and the Diamonds 3.43. And again, on the weekly chart as well, finishing up at the top of the range. It was such a strong week that we had a pretty significant change in my timing model. Of course, my timing model couldn't predict the news that was coming out after hours on Friday. Bitcoin was up 0.5%, excuse me, 1.24% on the week. I'm hitting the wrong button there. Bitcoin was up 0.92 on the week. Dollar was up 0.8, and volatility dropped. That's what happens when watching a baseball game and doing a video at the same time. And you can see that volatility, again, big drop on the week. If we look at the S&P 500 and we look at Friday, it was kind of a rotation in that the strength of tech and communications, they were the laggards, although still positive. The only thing that was negative on Friday was energy. And you could see up at the top, healthcare, utilities, real estate, some of the more defensive sectors actually rotated. And, even with a strong week or a strong couple of days, healthcare is still down over 10% over the last 50 days. So healthcare oversold bounce. We'll see if it does anything. Over 5 days, If we look over 5 days, we can see tech, discretionary, industrials really led, and that's, I think, what you want to see if you're a growth stock investor like I am. Let's go back to the 1 day change. I have themes, and on Friday, blockchain, genomics, Norway, biotech, data centers, fintech, home construction, dynamic leisure. So what's missing from there are the semiconductors and the software stocks. Over on the right is a really powerful tool, especially since it's updating real time during the day. And that tool is giving you some great metrics around breadth. The top, so you have four or three sections. One's the S&P 1500, the Nasdaq, and the NYSE. The big indexes, not the Nasdaq 100 or the S&P 500. And it's taking the stocks in each index, assigning them into sectors and industry groups. The blue shows me on Friday all the S&P 1500 sectors were up. That's pretty strong, higher than it was on Thursday. On Friday, 88% of the industry groups in the S&P 15 were up, strong, and 78% of the stocks were up. You can look at each of these 91, 83, and 59, the NASDAQ, so a little bit more mixed on the NASDAQ. And then on the NYSE, all the sectors 84 and 67. I love this tool, especially that right-hand side during the market day, because it enables me to see movement underneath the averages. And sometimes you'll see the market averages selling off, and then you'll start to see the breadth firming up, and it gives you a pretty good divergence signal that you're going to see a turnaround. And up here, I look at new high, new lows. On the left is the NYSE. On the right is the NASDAQ. Excuse me. You can see at 12 months, NYSE new high, new lows remain small but positive, and on the right, they are the Nasdaq are negative. So that gives me a sense of what happened Friday and on the week. I look at my buckets, which give me a sense of the distribution of stocks in their Bollinger Bands, overbought and oversold, and I would call this a right shift where the stocks are bullish, but with low numbers of stocks above the bands. I think you could see that we're not very overbought. Market breadth on the left is the NYSE, on the right is the NASDAQ. You could see on the big indexes strong movements on both sessions. You could see volume not too exciting on either. You can see stocks above the 20 in green, above the 50 in white, above the 200 in red. And then these are the percentage above them. And we got to a point up here, we were 84, almost 85% of the stocks were above their 20-day. And when you go to the left, that was a number that said, hey, we're getting a little bit rich here, expect a little consolidation. And we saw that. And you could see still pointing up on the longer numbers on the stocks above the 50, stocks above the 200 on both sides. And then down here, we have the new high, new lows, still positive on the NYSE, not on the NASDAQ. AD lines positive on both, and up-down volume positive on both. And then what kind of signals did we see at the end of the week? On Friday, we saw a BANGO, which is a very strong, exuberant buy signal on the NYSE, and we saw a BANGO on the NASDAQ. So that tells me be a little cautious that the markets might be a little bit overbought here. Add that to the news that I started with, and maybe we have something to be concerned about. Now, I mentioned there was a change. The daily and the buy-sell signal on my timing model is the bar on the bottom. And green is time to buy, red is time to sell. And the daily has been in a green now for a couple of weeks, but the weeklies had been in a sell. So we've been talking about how we're, from a market perspective, in a retracement, in a downtrend. And although you can go long in this scenario, it's something you have to be careful with because, um, rallies in a downtrend, bear market rallies are more suspect, and fraught with failure. Well, look what happened on Friday, folks. We turned to green on the weekly, and Friday, give it time for the Friday to catch up here. I got horrible internet where I'm at. There you go. And you could see on Friday, we went to a buy signal on all four on the weekly. So, am I ready to say new highs are coming? I think you have to think that's possible, but I am a little bit nervously short term about the credit downgrade. So, nice rally, switch the buy signal to sell signal to a buy. That's great. And we'll see where we go. If we look at the indexes, we already talked about the percentage performance. I'll be more qualitative here. I didn't want to do that. Let's just go to this here. There you go. You could see that on all of these, we're well off prior high, but at least on the spider, the Qs, and the diamonds, we've now taken out the 200. That means we took out trend line resistance, the 17-day simple, the 50-day simple, and the 200-day. And for the bulls, that's music to your ear. Up here is our extension model, and we're getting extended on the Qs, but we're not at a place over 95 that says too extended. Now the Russell's a laggard. It's still well below the 200, but like the others, it had a nice reversal here in the beginning of April, and just has to get above its 200. If you follow me regularly, you would have seen my video that said April 7th, the bottom is in, although maybe not the bottom. And it really has been a great run since that date. The VIX is getting back, but not quite to where it was down here. It was in the 14s and 15s, and we're at 17. So as we're breaking out, not yet to all-time highs, should we be concerned that the VIX is still a little higher? I don't know. It might be too close to say anything. And then the dollar sort of has failed at the 50, and even though it was up a little bit on Friday, 0.29%, it's still relatively low. If we look at the commodities, we can see gold is pulled into the 50 and maybe bouncing. Silver is at both gold and silver were weak on Friday, down 1% on silver, down on gold, also a little bit over 1%. But gold is sitting above the 50 and silver below. We look at oil, it came up to the 50 and failed. We look at natural gas, it failed. We'll see if it can make a stand at the 200. And then both the 10-year and the 30-year, down 0.31 on the 10-year and down 0.39 on the 30-year, were down on Friday. So that is my market review. My impression is if I was blind and deaf and just looked at the charts, I'd be pretty excited that we're going to go higher here. I think the market's going to have a little bit of a fit with the downgrade. This is the third of the credit ratings to do this. But at the same time, I think it might be one of those trade-off in the mornings. And then, let's not forget the strength we're seeing in the market may make up some of that ground. But I would expect some volatility to come in from that. My ratio charts, upper left is Bitcoin versus the spider. The rest are all the S&P sectors versus the spider. And you could see that technology, which had been weak for such a long time, is in the midst of a big run, as is discretionary. But on Friday, we saw staples improve. We saw utilities improve, real estate improve, and healthcare. A little bit of rotation in the overbought arenas. The other thing that's impressive how it stayed up is the industrials. Now, I think the strength of the program is how you can go through a top-down analysis of the markets. So the impulse list is the NASDAQ plus the NYSE plus the Amex filtered for $1 and 100,000 shares. And then we assign them each to a sector and industry group. That number will vary because in a strong market, you'll have more stocks jump up above the $1 level. And if I go into top down, you could see that I have a number of sectors. I'll rank them by 1-day performance. I have industry groups. I'll rank them by 1-day performance. And then I could do my top-down analysis. One way to be, you know, we could look at the top sector and the top industry groups, but let's just take the top 10 industry groups. 2, 3, 4, 5, 6. All right, that gives me 173 stocks. Each of these stocks are in the top industry groups based upon percentage return on Friday. Now, I might rank them by percentage return, and but I'm noticing some things look a little bizarre. I don't know DeFi, but what a move. Let's filter a little bit. Let's filter to stocks over $5 and stocks over 500,000 shares. And that leaves me with 107. And what I like to do is, and I see some really strong stocks there, is I like to look at 2-day momentum. And I like to filter or to rank them by that. So CRWV, this was an interesting IPO. I see them as a purchaser and utilizer and then kind of a renting out, leasing out the Blackwell type NVIDIA chips. And boy, what a fresh breakout to all-time highs. Took out the IPO high up here. Looks interesting to me. IPOs have their own special look and feel. Adobe had a big move on Friday, and you could see it's broken up here above the 50. It's still in a major downtrend, and I'd rather find things above the 200. Speaking of things in a downtrend, this is why I like them above the 200. They have a tendency to fail. Then it failed at the 50. United Healthcare, massive sell-off. Elevance is in the same space, and sort of have it undercut here. And will it rally off of this? Still too far for me to chase. Now, most of the healthcare stocks I'm going to show you are sold off things trading well below their 200-day moving average. But then you get to one of my favorites, which is McKesson. And look at this on a weekly. I mean, how would you like to own a lot of McKesson? I bet they've got really happy senior employees who get a fair amount of stock. This has been a great stock to own. It's recession proof. But let me just warn you, you see this little pullback here? This happened when we had our president announce his most favored nation's pricing policy for drugs. Now, I'm in healthcare. I work collaboratively between practices and payers. I have a lot of pharma and biotech companies that are my customers. Um, and so I'm conflicted in this issue. But if you're a drug distributor and you make a percentage of your sales as your margin, and your drug prices fall, that could hurt you. But an executive order here is just a piece of paper. And I think the market saw that. So if it looks like there's legitimate drug pricing reform, the distributors of McKesson, Cardinal, and ABC, now called Cencora, will probably have some challenges related to that. But until then, I just keep thinking of this weekly chart, which is phenomenal. So I like McKesson, and McKesson is on my short list of stocks, which we'll go through tonight. Um, Cigna is another insurer. Again, it's interesting to see a second insurer besides Elevance with how bad United Healthcare was. ARQQ, this is one of the quantum computer stocks, but the quantum computer stocks have made this basic shape here. And if I looked at, for example, QBTS, oh, that's not what I want. Oh, it's because I forgot the Q. Here we go. QBTS. This is one that did it again, and now is breaking out to all-time highs. It's starting to run. Does it have any fundamentals? No, it doesn't make any money, and that's revenue probably measured in millions, but it still has a $3 billion market cap. This is a group of stocks that a lot of hope and belief that they're the future. QUBT is another one, which probably looks more like the one I started with. QUBT, QUBT. And I don't own any of these, but it might be nice to get something like this and tuck it away and see what happens. And I think of all of them, I like QUBT. Much further down than QBTS. Had a nice breakout here, took out this level, which had been resistance. Um, Massive volume, gap, volume, breakout, momentum, relative strength moving up. OBV looks good. This is one that I think I could be interested in. And so this is just another one of the stocks that I'd be looking at. And this was also on my short list. So I'm crossing them off as we go. MOH is a Medicaid, uh, a managed Medicare rather provider, an MA provider. Um, the thing that damaged United Healthcare a couple of weeks ago was they struggled in their Medicare Advantage business, and this is a company that this is what they do. And then lastly, we have two more stars. Um, Not the TV show, but Constellation Brands is an alcohol company. You probably remember some couple months back, there was a discussion about putting on alcohol that it causes cancer, like tobacco, and maybe that's going to cause problems. A lot of the alcohol companies sold off, but I think we're still drinking. And then you've got Humana. I thought that was interesting because here you have another healthcare stock showing up on a leaders list. And just for completeness here, here's Core. Cencora, which is one of those distributors like McKesson. And again, stick it on a weekly. How great is that? How great is that? And then the other one in the group is Cardinal Health. Now, in my lifetime, I've sold, this is a weekly chart. How beautiful is that as well? I've sold a couple of companies to ABC, which is now called Cencora. We sold one to Cardinal Health. Um, I should have kept all that stock. Oh well. And then, so you could see the strength in this group. So top down, that's what top down's about. Finding the best sectors, looking at the top industries in the best sectors, and then looking at the charts. And it's how you sort them, perhaps, that matters. On the weekend, I go through all of these to look at because it's not that big of a number. Now, I also like other approaches. So let's go back to my impulse list. Now, from a bottoms up, that's where I become a scanner. So let's go back into the scanner button, and we already have price and volume. Now let me add 2 days up momentum because that to me has been one of my best signals. And let's see how many we have there. Okay, come on, it's going through and it's looking for it. There you go. Nope, yep. So these are stocks that made that list. Let's take a look at them. 2 day momentum up are these two blue dots above the yellow line. The yellow line is a squeeze. So I'll find some things that are getting ready to run on this scan. ELS, what is that? Equity Lifestyle. Now, again, I like things above the 200. EPR, it's kind of not a very tight stock. I prefer them tight, but it's in a squeeze and a breakout of momentum. Relative strength and OBV are, well, relative strength hasn't flipped yet. Let's look up here. It pays a 3.67% dividend. This is the earnings. This is the revenue. It's nothing that exciting. I don't know IPCXU because it's a SPAC. IRT is a realty trust. Mainstream Capital, or what's Main? Main Street Capital Corp. What kind of dividend do they pay? The specialty finance company. It pays a 6.3% dividend. It makes about $1 per quarter. Revenue seems to bounce around a lot, but it has have good revenue growth with a surprise on both earnings and revenue in their May earnings. That's okay. I could look up here to see if there's any news. why the market keeps paying a premium, following up on a hypothesis. Let's say I wanted to read that. Boom. I might pull this up, and this might be important because just what I see might be stuff that keep me out of the market. Unsustainable 2.0 times book value. All right. McDonald's. This actually showed up on my look at closely list as well. You'll see McDonald's pop up in a second. I'm on really slow internet, folks. I apologize. Loosey goosey. Let's put it on a weekly. Nice uptrend on the weekly chart. Really nice. Kind of not a tight stock on the daily or the weekly, but a sideways move and a breakout here on Friday. You can see here the OBV is positive. Relative strength is lagging. There's those two dots in a squeeze. This one looks like it could go higher. Here's my old friend McKesson. That's why I like to scan. It finds me some decent stocks. NNN. What's NNN? Nah. ORI. Old Republic International. Must be a bank. PCG. Utility, I think. Let's see. Maybe not. Yep, PG&E Utility. I think this is the one from, what was that woman's name that found the water? I think PG&E was the utility that she went against. I mean, I don't like buying things below the 200. You got to give it credit. It's a nice uptrend from its early in the year lows. I always like to check the dividend. Not much of a dividend on this utility. Trading below 200, I'd probably pass. Royalty Pharma pays a 3% or so dividend. It's an interesting business model. They buy a lot of royalties on existing products, so they don't have a whole lot of uh, development risk. And they basically get products that are in line. They give some money up front. The company needs money to develop the next product, and then they get royalties forever. Uptrend, sideways move. Is it getting ready to break out? Maybe it's less than 3. Yeah, 3.3% dividend. Really steady on revenue and earnings because it's kind of a predictable thing because they know what they're going to get on royalties at a regular basis. There's your Constellation Brands, which we looked at on a top-down approach. SUPN is another pharma company. It's below the 200. And WPC is, that's an interesting chart, a real estate chart. I mean, I like to look at things like this. I like to take and start thinking, is there a wedge forming here? And I'd like to buy this thing if it was to pop above the wedge on decent volume. But we're not there yet. So that was another approach that I take to the market. And then another thing I like to do is I like to come back in here and I like to go pullbacks in an uptrend because my signal market timing model says belong. Let's put the price and volume piece in here. Let's take my 35.48. Let's drop it down to 212 stocks. And then let's rank these by up dots, which are my momentum, gap, volume, breakouts. And let's just go through these very quickly. EVLV, don't know this industrial company at all. It's a cheap company. ARQQ, I think it's one of those quantum tech companies, quantum. And look at this. Big move off the 50, 217, great volume. CPR, volume, breakup momentum. The Wilder RSI flipped as well. Vital Farms, I don't know what to do with this one, so I skip it. Constellation Brands, one more. So we've seen this a few times. RPRX, we talked about the Royalty Pharma. Here's another one that looks interesting. Let's see if we can take out some of that moving around with the weekly. So from a weekly perspective, you can see the strength in Ollie's, a discount retailer. When I look at the daily, I kind of get nervous in this range because we're kind of sitting on double, triple top. So I'd be looking to see whether or not this can break above this line. But it's sort of been in a Darvis box, or not really a Darvis box. I guess it's an ascending wedge. But you're coming off that line into here. So I'd have to see a breakout above this before I got too excited. Molina, we looked at earlier. Notice every one of these stocks, for the most part, is above the 200 until I get to this guy. Lamb Weston Holdings, a consumer defensive play, too far down for my interest. CRISPR, a biotech, they had some great news this week about a baby and doing some genetic manipulation to save its life. CleanSpark is a Bitcoin miner. ZTS, an animal health company. So I'll go through this looking to see if I find any patterns. Here's that WP Carvey. I'll wait for it to break out of the wedge. BICI is a REIT that owns a lot of casinos. The REITs are always going up here, a 5% plus dividend. That's pretty cool. Very consistent earnings. The revenue is pretty consistent as well. If you want a nice dividend, you want a piece of Vegas without the volatility of a casino, that one looks pretty interesting as well. Now, there were a handful of stocks that I found that I liked, so let me just go through those. SMCI, I think we know this guy. They're a big computer assembly, big customer, friends with NVIDIA. Had some questions on accounting. If you look at the weekly, you can see what happened to the stock. Well, it's been going sideways. To be honest, it's been kind of silent about the anything about the fraud that was um, suggested. Again, you just click on the link. You can read all about it. It's a motley fool. But I like this one, and I'm interested in it. I don't like its current earnings per share pulling back, but I think this is kind of a turnaround stock. And you could see the revenue before it got into trouble. And somebody must think something's going on here because you had a beautiful move on Friday up quite a bit. Um, what was it? 27 to 46. Not quite a double, but a pretty strong move on Friday. Costco. How do you not love Costco? Well, I always get nervous by its fundamentals. It's got a price to earnings ratio of 60 and a growth rate that kind of looks like it's slowing down. But we all know it's the best retailer out there. Big uptrend, pull back to the 50, probably some of it driven by tariff. That's the weekly chart. I apologize. Let's flip back to the daily chart. And you could see Costco is starting to move again, but I think that weekly chart tells the real story. If I like Costco, what about Walmart? Both of these, their earnings are out. And you could see our friend Walmart uptrend, kind of junky here, maybe getting ready to take off again. Now, in the semiconductor space, what I liked about Micron is that's not Micron, MMU, and I just realized I have to go find it here, Micron, breaking above the 200 after a deep sell-off, and look how many times it failed. Now, we have to make sure it's not doing this, that it actually, if it retests, it actually tests and goes higher. But what I liked about Micron, let me just pull up market surge. Look at Micron and look at earnings per share growth and earnings per share and earnings per share growth. 11 and 26, 57% growth. The PE is 19. That PE, even if it stays the same, 19 times 11, it's a double. So I love these earnings. I love the fact that the earnings growth is way above on the PE, and I love the 437%. That is a turnaround play if I've ever seen one. I'm going to be interested in watching Micron. Maybe it's early. LUNR is another space company. Let's go bring up LUNR. It's a great name for a space company, Lunar. They have to do with robots. And again, it's this ugly pattern, shooting star, sell off, but is it getting ready to run? Relative strength is turning up here. OBV looks good. Lots of blue dots in here. So Lunar looked interesting. In the grocery store world, talk about boring and defensive. Sprouts, Farmers Market. So let's look at this at a weekly. You can see just a hell of a run, and now it got a little junky. Is it possible we have earnings growth enough to break through that? Well, let's just pull up and ask that question to Market Surge. This is one of the main reasons I keep Market Surge. SFM. $39 times 5 in 2025 and 13 times 5 in 2026, 571. So let's say it's 6. If you want to pay multiples 36, less excited now because it's already trading at its PE. Certainly could go higher, but I'm not sure I'd be keeping it forever because the growth rate's starting to slow. All right, well, I wanted to look at that. So is it a horrible thing to buy now? No, especially, I guess the safe part would say, got to take that line out, but that's 6% from here. You may not want to wait, but I would look at that as potential resistance. Here is a one that I never heard of, PDYN. And I'm looking at this stock and I'm thinking, okay, here's that pattern again. It's not my favorite pattern. I like the blue coming in. And then I said, let's look at the fundamentals. And I go, oh my God, it went from losing to 55 cents on earnings. Makes a little bit about revenue. I don't totally understand that. So immediately I question my own tool and I go into PDYN and I go into Market Surge and I see, holy Toledo, minus 271 to positive 208. It's a $7 stock. Okay, I'm going to probably buy some just because if it gets anywhere close to those numbers, it's worth a lot more than $7. So this is sort of my lottery ticket of the day, in case you like to buy lottery tickets. Let's see, CTRE is a REIT. You do nursing homes. Boring looking chart. I agree. Not on the weekly pullback. Now breaking out from the 50. And if I look in here, what's your dividend? You pay a 4% dividend. Again, steady on the earnings, very steady on the revenue, maybe even boringly steady, although moving up a little bit. So CTRE looked interesting. And then I'll finish with an insurer, an old name, a name that don't know what the government stake is today, if they're even in it anymore, but one of the ones the government saved in the great financial crisis. Yeah, no one talks about that anymore, but how much money the government got when these companies turned around. I just like sideways moves and basing. Looks like it's ready to break out. AIG is another one. So I'll just finish on what everybody always asks me about. Well, what do I think about the MAG 7, 8? So let's go through here very quickly. I got to figure out where I put them in this list. Or do I not have them built in? Oh, I thought I looked at them already. Huh. Oh, I did the cardinal sin of any program. Take off your filters. Ha! So let's kill the filters. Kill the filters. Kill the filters. And here they are. So Amazon, trying hard. As long as it stays above the 200, I might be interesting. Just don't like what it did the last couple of days. APP had a big run. Now it looks like it's pausing. Google, Um, Looks like interesting. Got to get above the 200. Meta, nice breakout. Pullback. That looks like a bottoming candle. Is it ready to run? Microsoft, this has been powerful. You can see it took out the recent highs here. Like that chart a lot. Here's the king of them all, Netflix. This is the reason why communications is doing so well. All-time highs. Looks beautiful. Nvidia has just turned around the market with this move. I still have puts on this because it's my biggest position. I sold some calls and bought some puts back a while ago just as insurance on my portfolio. Broke out of the trend line. Might be time to think about covering my puts. And then lastly, Tesla, which last weekend I said was my pick of the week. And I think you could see why it was sitting on the 200 and it had a great week. So there you go. Market thoughts. I think that news may slow us down, but I think we're going higher. Um, I think technology is going to lead. And I showed you some of the stocks I like. And we'll see you on Monday night. Thanks, everybody. Join my top down group and come see me in Orange County.